What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, again, I'm going to go over QDTE and XDTE with its passive income. I'm going to reveal to you 3 REITs that I sold, which I'll rebuy, it looks like, in a month. It was time to do that. I'll actually sell them as a profit and rebuy them. I think it was a good move because I need some money with QDTE and XDTE. Try saying that 10 times fast, both of them. And I want a good bang for my buck when my passive income with the DTEs buy dividend growth stocks. I'm going to give you 4 dividend growth stocks that I cannot wait to earn passive income with and reinvest from the passive income from QDTE and XDTE. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 4 dividend growth stocks right now. So the first thing I want to go over is the passive income trends of QDTE. You got 56 cents, 51 cents, 47 cents. Is it guaranteed? No. So, you know, if I can get 30 cents to 50 cents weekly, okay, per share, I'll be in pretty good shape long run. And again, using my X income and passive income from my social media, I'm going to use that to buy these guys, QDTE and XDTE, and we're going to jump to the passive income of XDTE. Now the passive income of XDTE is 35 cents, 41 cents, 38 cents. So again, I'll be happy if I can get 30 cents to maybe 40 cents weekly per share. So I can use that to buy dividend growth stocks. And we're going to go over the 4 dividend growth stocks that I can't wait for the passive income of these DTEEs to buy. One of them is Kroger. They have a very good dividend growth history as well as good revenue trends. They're sitting at 51.95. I like when I invest in stocks or companies that are busy. I like seeing busy. Kroger's busy. I'm not adding Starbucks to this list, but Starbucks is always busy. And plus, they got the new CEO. Dividend yield 2.46%, PE ratio 17.71. Average volume 3.84 million. The market cap is 37.50 billion US dollars. It's keeping up with, starting to catch up to the S&P 500. Year range is 4210 to 5834. Day range is 5165 to 5244. Previous close is 5222. So let's go over the revenue trends and dividend history. So annual income statements I'm going to go over. This is all on Google Finance. Revenue was up 8.35% 2021. The operating expense was up 13.65. Net income was up 55.82. Net profit margin 43.38%. Earnings per share was up 58.45. 2022 was a little bit down. The revenue was still up 4.07%. Earnings per share was 368. 2023, everything was up. Revenue was up 7.52%. That was 148.26 billion. That's a lot. Now, again, look at how busy Kroger is all the time as well. Operating expense was up 2.31%. Net income was up 35.59%. Net profit margin 25.83%. Earnings per share was up 14.95%. That was at 4.23. EBITDA was up at 14.73%. Then, 2024 so far, revenue was up 1.20%, operating expense 4.26%. Net income was a little bit down, net profit margin was a little bit down, but earnings per share was up 12.53% at 4.76. So that's huge increase from 2024 earnings per share 4.76 to 2.19. So you're seeing a nice earnings per share, EBITDA going up. That's also attractive as well. Let's jump to the dividend history. I'm going to start in 2018, 14 cents, 2019, 16 cents, 2020, 18 cents, 2021, 21 cents, 2022, 26 cents, 2023, 29 cents, 2024, 32 cents. Very good payout ratio at 25% according to Zacks. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 16.80%. So if you bought one share, you made $1.28 with a 2.46% dividend yield. Now, I'm not adding Starbucks to this one. I'm going to show you one that's a pretty good one, and it's a rival to Pepsi. Take a guess. Which would be Coca-Cola, sitting at 69.79, a dividend yield of 2.78%, PE ratio of 28.37, average volume 13.06 million, market cap is 300.79 billion US dollars, year range is 51.55 to 70.13, day range is 68.94 to 69.85, previous close is 69.33. So let's look a little bit more into Coca-Cola. I'm going to start in 2021. Annual revenue, that was up 17.09%, 38.66 billion. Operating expense, 11.87 billion, it's up 23.74%. Net income, 9.77 billion, that was up 26.13%. Net profit margin, 25.28, that was up 7.71%. Earnings per share, 232, that was up 18.97%. 2022 revenue was up 11.25%. Operating expense was up 6.73%. Yes, net income, net profit margin was a little bit down, but earnings per share was still up 6.90%. EBITDA up 5.55%. Then in 2023, the revenue was up 6.39%, operating expense 9.93%, net income 12.28%, net profit margin 5.54%, earnings per share 8.47%, EBITDA up 6.18%. The revenue, again, 45.75 billion. That was quite impressive. It was up 6.39%. What else is impressive is the dividend history. I'm going to start in 2012 with a dividend growth, 26 cents, 28 cents, 2014, 31 cents, 2015, 33 cents, 2016, 35 cents, 2017, 37 cents, 2018, 39 cents, 2019, 40 cents, 2020, 41 cents, 2021, 42 cents, 2022, 44 cents, 2023, 46 cents, and 2024, 49 cents. So yes, a little bit of a high payout ratio. Still not too worried. The trends look pretty good. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 4.05%. So if you bought one share, you made $1.94 with a 2.78% dividend yield. Now let's jump to their rival, PepsiCo. And Pepsi is sitting at 175.87 with a dividend yield of 3.08%, a PE ratio of 25.51. The average volume is 5.22 million. Market cap is 241.57 billion US dollars. Year range is 155.83 to 183.39. Day range is 173.67 to 176.68. Previous close 175.74. So what do I like about them? Well, first off, I'm going to just go over 2022 and 2023 with their annual statements. Revenue was up 8.70%. That's 86.39 billion. That's quite impressive. Earnings per share was up 8.47%. Net profit margin was up 7.51%. Net income was up 16.96%. That was at 8.91 billion. EBITDA, look at that, up 3.18%. The best thing in 2023, there was an increase in revenue as well, up 5.88%. This is annual revenue. Operating expense was up 6.70%. Now, net profit margin was slightly down, but look at the earnings per share, up 12.22% at 7.62. EBITDA, I use that as a big indicator too as well when it comes to investing, up 9.64%. Now let's check the dividend history. Now again, this dividend growth is fantastic. Starting in 2018, 81 cents to 93 cents. 2019, 96 cents, 2020, 102, 2021, 108, 2022, 115, 2023, 127, 2024, 136. Yes, the payout ratio is slightly high at 68%. I'm not too worried. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 7.22%. So if you bought one share, you made $5.42 with a 3.08% dividend yield. That's quite attractive for me. Now let's jump to the final dividend stock. This is another really good dividend growth stock, which is Procter & Gamble, sitting at 169.17. The dividend yield is 2.38%. The PE ratio 28.10. Now it's not keeping up with the S&P. That's attractive to me. The average volume is 7.00 million. Everybody's like, well, you know, you do this and that. Well, my goal with my IRA is to beat the S&P 500 or keep up with the S&P 500 or my 403b/401k. So again, I'm just being very straightforward. My goal is to earn passive income and have very good dividend growth companies in the long run, good revenue, affordable, and is not blowing up in price per share so that I can afford it. Year per range 141.45 to 171.89. Day range 168.25 to 170.11. Previous close was 170.15. So yes, if you have an IRA, and I'm going to explain this one more time. If you have an IRA, okay, Procter & Gamble to me would not be a good stock because it's not keeping up with the S&P. Yes, the dividend growth is nice. That's why I have NVIDIA, which has beaten the S&P 500 in one of my IRAs. So let's jump to the revenue trends and the dividend history. Look at the recent annual revenue trends. Now, Procter & Gamble has so many products in the store. What I like to do is look at that logo PG and you'll see it. Revenue 82.01 billion, that was up 2.27%. Operating expense 20.35 billion. Now net income, net profit margin was slightly down 23, not too worried. Earnings per share 1.55%. EBITDA 21.77 billion, that was up 2.44%. Then in 2024, the revenue was up 2.48%. The operating expense 10.53%. Net income was up 1.54%. Earnings per share 11.69%. It was up 6.59. EBITDA, try to say that 10 times fast, up 9.52%. So things are looking good with the trends. Now let's check out the dividend history. Now we'll start in 2012. It was 56 cents, 2013, 60 cents, 2014, 64 cents, 2015, 66 cents, to 67 cents in 2017, 2018, 69 cents, 2022, 72 cents, 2019, 75 cents. When I have to slow down, that's a good thing because I got to make sure I have accurate numbers when I'm reporting this per Zacks. So that's a good thing. 75 cents, 2020, 79 cents, 2021, 87 cents, 2022, 91 cents, 2023, 94 cents, 2024, 101. Yes, the payout ratio is slightly high. I'm not too worried. Look at how much stuff they sell in the stores. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 6.19%. So if you bought one share, you made 403 with a 2.38% dividend yield. Now I'm going to just use Procter & Gamble as an example versus QDTE and XDTE. You're seeing growth. Now QDTE and XDTE, I highly doubt there'll be dividend growth. Now, the weekly income is fantastic. Don't get me wrong about that. But look at this. 2009, 44 cents, and it's 101 in 2024. Now, is it a guarantee there's going to be dividend hikes? No. But remember, dividend growth always wins. So in 20 years from now, the dividend growth, if I had probably, let's just say 200 shares of Procter & Gamble, there's going to be a little bit more consistency with income and raises potentially versus XDTE and QDTE. So right now it's like the tortoise and the hare. A lot of you, I like to give that reference. Yes, I have Yieldmax, I have PFE, I have BITO, but long run, guess who's going to win? These dividend stocks, and guess what? They don't have an expense ratio either that's going to be a headache in the long run. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Do you like my strategy of using QDTE and XDTE to buy dividend growth stocks? You let me know, because I believe long-term dividend growth is going to win. And I own both. I'm kind of a hybrid. I'm an income investor and dividend growth investor. So take care and have a good one. Have a great Sunday. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice, as well as a tax advisor for tax advice. So you need to go to those people for tax advice and financial advice. You should not and will not use my YouTube channel for any form of reference for financial advice and or tax advice, because the purpose is for entertainment purposes only. Be aware when you invest, you can gain money, you can lose money. So you have to do your due diligence and make smart economic decisions. I'm going to say this one more time. This is not financial advice or tax advice. Entertainment purposes only. Have a great Sunday.